Hi, good morning or afternoon. Welcome to another edition of Video Market Analysis by Traders Club. This is market analysis for the 14th of October. And as per usual, let's start with a big disclaimer. Anything that we discuss here, it's available in public domain, and therefore it should not be considered investment or a trading advice. We are simply sharing the information for the benefit of the club members. I would like to start this week's analysis by looking at S&P 500 daily time frame. Our last report was covering this fairly bearish candle after the publication of non-farm payroll numbers, and as anticipated, we saw another red candle forming, which created a evening star reversal pattern, which was quite bearish, and subsequently we saw quite a bit of a sell-off as well. This dotted line, it's still significantly important support. We are talking about 1425 level, 1430 because of this previous high, but 1425 really, and these levels should really hold, purely because they're 50 period moving average here as well, and this previous highs and previous lows. So this support is significantly important. If we see the loss of that support, then the price can drop lower very, very quickly. The next level that I'm watching at the moment is 1395 level, which is the cluster of these previous lows, and also 61.8 fib retracement from June lows to the current highs. If that support fails, then we would probably move lower, and this 200 period moving average on daily time frame at 1369 would be a logical a level as a support level as well, which is also 50% fib retracement. So a number of levels there. Concerning bit is yet again the loss of 1425 level, and we could possibly see a very quick drop to 1395 because there's nothing in between. There's no moving averages, previous lows, there's nothing. It's just an empty space. Alternatively, if this support holds, we could see another retest higher. So potentially that can be a little bit more visible on hourly time frame. We could see the loss of the initial support at 1430 on Friday, and the price kind of dropped to retest this 1426, 1425 level, and so far we closed barely above. There's a bit of a movement in oscillators and indicators. So RSI actually created a higher low while the price created lower low. The same thing happened with MACD. So we have a lower low here, we have a higher low here, and obviously stochastics as well, so higher low here. So these three indicators are basically pointing to a possible divergence, positive divergence. So if we see this support holding and possible move higher, then the logical levels of resistance on the upside would be here at about 1440, 1439, followed by 1447, and then obviously 1457 before we attempt to go higher than the previous high, which is 1474. Alternatively, support on the downside is quite a way down. We are talking about this 1396, 1400 level again. So quite a significant drop if the current support doesn't hold. This is a chart of volatility index, VIX, which is inversely correlated to S&P. So a further selling in S&P initiated a spike in volatility index. Currently the price action is retesting this falling resistance line, and it's been channeling in this range for quite some time. So the resistance on the upside, it's clearly located just above this falling resistance line at 1614, followed by 16 1699, 1699, which is upper Bollinger Band, followed by 1806, which is this green line, and that's 200 period moving average, followed by 1888, which is 38.2 fib retracement from high to the current low of 1330. So a number of levels higher. If we create a daily close above this level and a candle that actually stays up, it potentially could be quite bullish for VIX, which would be very bearish for S&P. But bear it in mind, we're seeing a neutral RSI and stochastics as well as possibly curling, so quite a bit of resistance ahead. Support on the downside, it's clearly located at 1518 level, which is almost the cluster of this 20 and 50 period moving average and also middle Bollinger Band, followed by 1350 and 1330 levels. So a fairly tight trading range, but I'm keeping an eye on this. This will tell me very quickly what might possibly happen with S&P. Let's look at copper. Copper is a leading indicator for S&P, and we could see here that there is a consolidation range forming. Bollinger Bands are actually tightening a bit as well. Stochastics is creating higher lows. Same thing with RSI as well. So to play this, the safest thing would be to wait for a breakout above this falling dotted line, which is resistance, and also this falling resistance here. So the spike higher resistance would be on 1375 followed by 1381, and only a successful close above these levels, which is 383, would call for 395 level and higher. Alternatively, if we had lower than the current support, following support is located at 362 and 359 before we move any further. So quite a tight range there as well, a bit of a consolidation. This is daily price action for gold, very similar to copper. We had quite of a exuberant move higher, attempt to break above the previous high, which was here at 1792 level, and the failure, rejection of that level, and obviously confirmation of that resistance. We lost the support of the 20 period moving average at 1772. So the next logical support on the downside, it's located at 1740.67, followed by 1722, and finally by 1705, 1704, which is a 61.8 fib retracement from this low to this high, and also a 50 period moving average. Anything lower than that would be quite significant, and then potentially this 200 period moving average would be a significant level to watch. But these are some really big moves. QE3 dollar printing, I'm not really sure. So in order for us to move higher, we would need to move above this 1798 level, call it 1800, and create a daily close above that level to stand any chance to move higher. So resistance overhead, it's based at 1798, call it 1800. The next chart is WTI, NYMEX crude oil. We had a pullback which looked like ABC, a tweezers pattern created, which is usually a very strong reversal pattern. This should usually be followed by another bullish candle, but that wasn't the case, so we saw the actual sell-off, but we are subsequently moving higher. Also, these levels were quite significant because that's a fib retracement from June-July low of 77 to the current high. And price is actually consolidating in a sideways fashion at the moment. the significance of these levels is that any further break above 93, 96 level could be seen as very, very bullish. And then the next level that we would see as a point of resistance on the upside would be this level here of 95, 96, call it 96 as a round number, which is a 200 period moving average. And then above that we have 100 again. So a triple digits possibly in sight if we carry on moving higher. There is a huge amount of geopolitical element in this price. So we have the issue with Turkey and Syria, and obviously Iran and Israel. So there's a huge amount of geopolitical weight in this price action. So from the technical levels, it looks bullish if it breaks higher. Also on stochastics, we have a creation of higher low, which is a confirmation of possible a reversal or maybe a trend change as well. The only thing is the stochastics move from oversold to quite high, almost overbought, very, very quickly in a short period of time. RSI is in neutral and a curling down, so it can play both ways. Support on the downside, it's clearly located at 91.63, which is the current level here, 91.45 as well, followed by 88.68, which is a 50% fib retracement, and obviously 85.92 level. And the last chart that we will be, this is dollar index. There is one chart after this. Dollar index attempted to go higher, but got a confirmation of the major resistance here at about 80 level, which is quite a psychological level as well. We have a creation of lower highs on both stochastics and MACD. We are testing that resistance now. So the price action is attempting to go higher within this falling wedge. Two ways of looking at this. This is downtrend because the price action is actually trading below moving averages. So this consolidation range could be seen as a rising wedge in downtrend, which is a very bearish setup. Alternatively, if we tend to break higher above 80 level, especially if we close higher above 80.73, it could be seen as quite bullish and potentially indicate a higher prices to come. But QE3 means softer dollar, so it seems to me that it's almost like a one-sided bet, but we have to wait and see. Support on the downside, it's clearly located here at 78.68, followed by 77.39 before we move any lower. So the last chart is the chart of euro dollar, and it's a fairly small amount of data, but I just wanted you to pay attention to this level here. 128 level. The price action broke higher above 200 period moving average, came back to retest this falling resistance, which is now newly formed support, and also 200 period moving average, and subsequently we had another bounce and a retest of that as well. So if we lose 1.2800 level, it would be seen as fairly bearish, and probably majority of the traders would attempt to short it at the loss of these levels. Alternatively, if these levels hold, we could carry on in this consolidation range for a while longer until we successfully break higher. So the resistance on the upside are located here at these previous highs at 1.365, I believe, and 1.3145. But the major support level is based here at this kind of buying zone between 1.280 and 1.2821. The loss of that would be very, very concerning. Okay, so far we covered everything. Hopefully you enjoyed it, and if you have any questions, contact me. Thanks.